Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. I think we all know what the bad news in the market is. We know about all the fears of recession and inflation, slowing revenue and EPS growth. But in today's video, we're going to take another approach. We're just going to ignore the noise, get down to metrics, and take a look at what stocks are sort of labeled as buys or strong buys, despite the storm clouds that are hanging over the economy right now. All right, now in the interest of time to comb through hundreds of stocks, I set up a stock screener here, customized one here in Seeking Alpha. This is part of their premium subscription. If you're interested in learning more about Seeking Alpha Premium and potentially supporting the channel, my affiliate link is in the description. You get a free trial and 50% off your first year. So check that out if you like what you see. Now, here's how I set things up in terms of how I look at stocks and the metrics that are important to me. Right now, since we do have some storm clouds in the market, I think it's wise to stick closer to the large and mega cap names. I also focus most of my investing here in USA, so just to make it easy, I'm going to stick with that region. And you see this revenue and EPS growth. So I added another filter because I'm only interested in companies that are growing the top and bottom line. It doesn't have to be gargantuan growth of plus 30% or something like that, but I do want to see progress, and I think that that's some of the confusion that's going on right now in the market. The assumption is that no companies are going to grow, and in my opinion, the truth of the matter in the face of these economic challenges is that growth is slowing. But slowing is not the same thing as declining or even being flat. And all of the 355 stocks that I have on this particular screener all have growth on the top and bottom line. I'm going to guess that it's hard for you to read this small print that outlines my filters, but we basically have United States stocks, market cap of over $10 billion, 10 billion or over, so large and mega cap. And then we want to be able to filter by the Seeking Alpha quant rating, authors rating, and Wall Street analyst rating. Revenue looking forward needs to be at least 5%, and EPS looking forward also needs to be at least 5%. So if you don't see a particular stock that you're thinking about in your mind before we start this video, it's very likely that it did not meet some of these criteria. I would guess off the top of my mind that, the PE non-GAAP looking forward, it has to be positive, and the revenue growth and EPS growth for the stock that's in your mind may not have reached the projection of at least 5%. All right, so let's buzz through this list, and I'll tell you what we want to look for. So obviously Seeking Alpha does a good job with this kind of color-coded system. The stronger you are into the green, in this case with Microsoft, under the Wall Street analysts, it gets a score of 4.6, 5 is the highest. That puts it in the neighborhood of strong buy according to consensus Wall Street analysts. When you see the lighter shade of green, this score is 3.63. It is still a buy, but it is not a strong buy. And then yellow would be more or less a hold. And our three columns total, so this one is the quant formula, which is an algorithmic score that Seeking Alpha puts together. Seeking Alpha authors is in the middle, Wall Street off to the right. And in order to go quickly through this, I want to see greens across all of these opinion channels, right? I want the algorithm to suggest it's a buy. I want the authors, the Seeking Alpha authors, to concur that it's at least a buy on a consensus level. And I want Wall Street analysts to do the same. So right here in this screen, at least for the ones that are showing up, we have basically one stock, and that is Google, as of right here today. Now you look off to the right, in case you're curious, the columns here are valuation, growth, profitability, momentum, and EPS revisions. All right, so obviously With valuation, you see some red here. You're always going to get that with higher growth stocks, and the way you have to understand the valuation is it's sector relative. So in the case of Google, I think they're in the communications sector. You see they got a D for their current valuation. But on the same token, that can be offset relatively quickly if you're looking ahead to the future, because their momentum and EPS revisions have come in more positive than the current valuation. All right, so stock number one is Google. FYI, I am sorting by market cap here. So we're in large and mega cap stocks sorted by the biggest stocks on the planet, at least from a United States perspective. But we only have one in the give or take top 10 that is getting greens across the board. Let's see if we can find another one. Stop right here. We have Broadcom. All right, Broadcom gets a high rating from the quant score, slightly less from authors, but then a buy also from Wall Street analysts. So Broadcom may be one to add to your watch list. Next, we have Merck. Okay, getting into healthcare drug manufacturing. High score on seeking alpha quant, and then buy scores, if you will, the lighter shade of green, across authors and analysts. Keep going down here, we've got Disney. Disney is a buy, but it received no strong buys across the three sort of opinion channels. Then we have Comcast. Very interesting with Comcast. You have 4.62 on the algorithm that suggests a strong buy, and then a lighter score on authors and Wall Street analysts. T-Mobile, green check marks across the board. In fact, they've gotten all fours or above for T-Mobile. That seems a little interesting to me for folks that are worried about the consumer sentiment and consumer spending, because T-Mobile would obviously fall right in that world. I guess you could say that cell phones are essential nowadays, so maybe that's one reason that it's doing well on the scores. All right, next up we have AMD, strong score out of the quant, buy out of authors, and buy out of Wall Street. Going down, Qualcomm. So the chip sector is well represented here early, despite the fact that many bears would say that the chip shortage is coming to an end and margins are going to be under pressure for many of the chip companies. The analysts and the quant formula seem to disagree with that sentiment. Then we have Raytheon, so getting into defense and space and exploration type fields. Raytheon is getting buys across the board, a little low on seeking alpha authors at 3.71, but that is still in buy territory. Next up, you have Union Pacific. So getting into railroads here, and that has buys across the board. Interesting that analysts and authors have it below a 4, but still in the buy range. So Union Pacific, if you're looking for something a little bit different in the logistics industry, that could be one to look at more closely. And we have to go way down, it looks like, for our next candidate. Charter Communications is basically a cable company. They do have some other communications lines, but they're serving residential customers, also probably small business in there. So Charter Communications. Scrolling down, we have Micron, yet another chip provider. 4.69, 4.2, 4.61. This is very easily a strong buy, and you can see across the board on the other categories as well, it looks to be scoring pretty well. Next up, we have EOG Resources. EOG Resources is in that gas and oil play in terms of exploration, drilling, selling, all those things. Interesting though, if you look at EOG as it stands right now from a market cap perspective, we're down into the $80 billion market cap threshold, and this is our first energy play that scores green checks across the board. Next up, you have TJX. This is a stock that I actually sold here recently after holding it for a long time, and it's getting buy signals across the board. The reason that I sold it as it relates to what my cost basis was and what I think is going to be the upper threshold limit of where TJX can go. I sold it around 65. It might have another $5 in it unless they absolutely destroy earnings. But I was happy to take some profits in a time where profits are hard to come by, right? Next up, you get into medicine, Vertex Pharmaceuticals. Algorithm loves this at 4.5. So do the authors and analysts, scoring in the 4s. Next up, we have Fidelity, FIS. Fidelity is a brokerage, massive investment firm. It's getting 4s from all of the opinion channels. And Boston Scientific, barely squeaking in here with the 3.86 on the algorithm. But Boston Scientific does get green check marks across all 3 categories. Here we've got KLA Corporation, which is another play on semiconductors. If I remember correctly, they set up testing equipment and optimization type equipment for semiconductor manufacturers. Don't quote me on that, it's off the top of my head. However, you got 3 checks there. So semiconductors again. Are we going to have a semiconductor bounce back after some brutal sell-offs? We'll have to see. Then you got AE Power, electricity and gas services. AEPs gets a 4.5 on the quant score, 3.5 on authors, and just below 4 from Wall Street. Emerson Electric, 4s across the board. Next up, we have Dr. Pepper, KDP. Not as strong conviction here, 3.9, 3.5, 3.7, but it does hit all the green checks. Scrolling down, we have Corteva. Not 100% familiar with Corteva, but the algorithm loves it at 4.67, just under 4 for authors and 4 for Wall Street. Cisco Corporation, the other Cisco Corporation that creates food, it's basically a huge distributor to restaurants and institutions in terms of food service. 4.57 on the algorithm, 3.6 on authors, 3.83 on Wall Street. Right, hit one more here, Realty Income, which is a REIT for commercial property. They're sort of home of the triple net lease, right, where they would book out to the Walgreens and CVS and huge stores like that. They own the property, and the tenants actually have to pay for just about everything to use the property. It's a very popular dividend stock and scoring well at 4.6 on the algorithm, 3.6 for authors, 3.8 for Wall Street. Okay, now let's take a look at some of the top 3 or 4 names in each of the quant formula categories. So I'll sort this by valuation. We want to see the very best. You have NRG, Builders Force, and HP Incorporated. So of those, you see that Builders First looks like a strong buy across the board. It didn't make my initial list because you're down here at about a 11.5 billion market cap. But sorting by valuation instead of market cap was able to bring that up a little bit. How we doing on growth? Which growth names are in here? We've got Analog Devices, Booking Holdings, and Baker Hughes. Now, if we sort by the growth column, one name that shows up here with greens across the board is Discover Financial Services. Now, let's take a look at profitability. Again, we want to get the best at the top. We have the big tech names. Our first full green under profitability is Broadcom, AVGO. Now, let's take a look at momentum. Which stocks are running a positive momentum in the market in terms of buying activity, inflows, stuff like that. We have Amerisource, Archer Daniels, and Anthem. The first one to get all greens, though, is CF Industries Holdings. And then lastly, under EPS revisions, this sort of insinuates that your EPS is outperforming expectations and is continuing to do so as analysts raise their targets. Here we have Archer Daniels, ADP, Arthur J. Gallagher, and looking for green lights across the board, we have Builders First, and we have AMD. So to me, it's surprising how well the chip sector is represented here. Again, this is not a tech stock screener. It includes tech stocks, but it includes everything else. All the oil and gas companies that are popular right now, consumer goods like Procter & Gamble. All those names are in here, assuming they met the criteria of the screener. Okay, so that's a pretty hefty list of names to think about, despite all the negativity that you see on CNBC, Twitter, etc. There are plenty of stocks out there that are still rated as buys. This is not a hide in the basement situation. There are always going to be stocks that succeed in almost any environment. Now keep in mind that is large and mega cap stocks. Obviously, if you did a different set of filters, you would uncover probably several medium cap and small cap names as well. So if you enjoyed looking at this list with me, just let me know. If you're interested in a small cap filter list, I can do that as well for a different video. But let me know which stocks are on your radar right now, whether you're watching them or buying them or waiting for a certain price to come through. I'd be interested to see what your picks are. And before you go, don't forget to check out that Seeking Alpha Premium offer in the description. Use my affiliate link, get a free trial, get a significant discount, and you can build screeners like I just did here. All right, guys, hope everybody's doing well in this economic storm activity. We'll see you on the next video.